and welcome to our YouTube channel. In today's video, we'll be talking about the government crypto lockdown, Axie Infinity disrupting South America. By looking to past eras of innovation, regulators can work collaboratively to adapt rules and policies to support open competition and rapid innovation in the cryptocurrency sector. Regulators have struggled to keep up with this growth and may lift financial inclusion by applying rules to crypto markets that are not fit for purpose. But before we dive deeper to the government crypto lockdown, Axie Infinity disrupting South America, like this video, smash the subscribe button, and click the notification bell right now to be fully aware of what's happening with crypto. Moving on, government plans to tax cryptocurrency gains in Budget 2022. The government is mulling changes in the income tax laws to bring cryptocurrencies under the tax net, with some changes that could form part of the budget next year, a top official said. Revenue Secretary Tarun Bajaj said that in terms of income tax, some people are already paying capital gains tax on the income from cryptocurrency, and in respect of goods and service tax or GST, also the law is very clear that the rate would be applicable as those in case of other services. We will take a call. I understand that already people are paying taxes on it. Now that it has really grown a lot, we'll see whether we can actually bring in some changes in law positioned or not. But that would be a budget activity. We're already nearing the budget. We have to look at the point in time, Bajaj told PTI in an interview. Asked if a provision of TCS or tax collected at source could be introduced for crypto trading, the secretary said, quote, "If we come up with a new law, then we'll see what is to be done. But yes, if you make money, you have to pay taxes. We have already got some taxes. Some have treated it as an asset and paid capital gains tax on it," he said. Asked whether people involved in cryptocurrency trading would be categorized as facilitator, brokerage, and trading platform, and how the taxation would be done under GST, Bajaj said, quote, "There would already be such things available in other services also. So whatever GST rate they're taxed at, that'll be applicable on them. They have to get themselves registered. The GST law is very clear. If there is an activity, if there is a broker who's helping people and charging brokerage fee, GST would get charged," he said. Separately, the government is likely to introduce a bill on cryptocurrencies during the winter session of Parliament beginning November 29th, amid concerns over such currencies being allegedly used for luring investors with misleading claims. The RBI has repeatedly reiterated its strong views against cryptocurrencies, saying they pose serious threats to the macroeconomic and financial stability of the country, and also doubted the number of investors trading on them as well as their claimed market value. RBI Governor Shaktikanta Das earlier this month had reiterated his views against allowing cryptocurrencies, saying they're a serious threat to any financial system since they're unregulated by central banks. The Supreme Court in early March 2020 had nullified the RBI circular banning cryptocurrencies. Following this, on February 5, 2021, the central bank had instituted an internal panel to suggest a model of the central bank's digital currency. The RBI had announced its intent to come out with an official digital currency in the face of proliferation of cryptocurrencies like Bitcoin, about which the central bank has many concerns. Private digital currencies or virtual currencies or cryptocurrencies have gained popularity in the past 1 decade or so. Here, regulators and governments have been skeptical about these currencies and are apprehensive about the associated risks. It can be noted that on March 4, 2021, the Supreme Court had set aside an RBI circular of April 6, 2018, prohibiting banks and entities regulated by it from providing services in relation to virtual currencies. Meanwhile, an Indian government's plan to ban cryptocurrencies leads to heavy selling investors. Plans by the Indian government for a new bill that would bar most private cryptocurrencies has triggered heavy selling in the country's digital currency markets, as investors look to exit positions despite the losses, said traders and investors. The government will allow only certain cryptocurrencies to promote the underlying technology and its uses, according to a legislative agenda released late on Tuesday for the winter session of Parliament set to start this month. The bill, if passed, would effectively ban citizens in India from transacting in most cryptocurrencies. The dollar-linked stablecoin Tether or USDT slumped 25% to nearly 60 rupees or $0.8061 on Wednesday after news of the bill, according to Namish Shangvi, a cryptocurrency investor. A second crypto investor said the value of his portfolio had fallen to about 22,000 rupees from 34,000 rupees on Tuesday as a result of the heavy selling. "I am contemplating selling because the future is so unclear," said the investor, who asked not to be named as the information is sensitive. Several exchanges were facing deposit and withdrawal challenges due to the high volume of selling, said cryptocurrency traders. Wazir X, one of India's largest cryptocurrency exchanges, said earlier on its official Twitter account that it was investigating reports that users were facing delays on its app and website. It later said the issue had been resolved. There is an estimated 15 million to 20 million cryptocurrency investors in India, with total crypto holdings of around 400 billion rupees, according to industry estimates. There is no official data available on cryptocurrency holdings and the user base. As NFTs revolutionize the world with their innovative technology, many industries have seen themselves changing rapidly. Some of the biggest growth has been in the gaming space. An increasing number of gamers and crypto investors are finally getting their teeth sunk into NFT gaming. With decentralized games such as Axie Infinity and My Neighbor Alice becoming coupled with the metaverse, NFTs have disrupted the industry with their unique benefits. Their blockchain characteristics and vast utility allow players to use them as characters, commodities, special abilities, and other tradable objects in games. Perhaps most importantly to some, they allow players to generate additional income in-game. The most basic use case for NFTs in-game is representing characters and special items that give power-ups or other abilities. These NFTs may accrue value over time or as the game gains popularity. More importantly, players can issue NFTs themselves in some games, adding new content to the in-game world. Just how disruptive will Axie Infinity in blockchain games can be? Axie Infinity is inspired by Pokemon, but instead of catching them all, you just need 3 Axies to start playing and combat against other players online. Since every Axie costs quite a lot nowadays in the marketplace, start playing Axie Infinity is not free at all. The biggest disruption in gaming about Axie Infinity is that you can own your Axie's NFTs and you can trade them on the official marketplace in exchange for Ethereum. But most importantly, it has the play-to-earn feature that rewards you with crypto tokens called SLP that can be exchanged for other cryptocurrency and converted into dollars or your national currency. Axie Infinity takes the fun and alluring premise of Pokemon and adds the element of ownership into the mix. These Axies belong to you and yield tangible rewards. Smooth Love Potion or SLP crypto tokens that can be exchanged for money. The upfront costs will be a major roadblock for many players, but it's a game that rewards players the more time and effort that they put into it. Play to earn might sound like a marketing phrase or a gimmicky hook, but we're already seeing evidence of a player-owned economy taking shape around the game. Axie Infinity ecosystem has 2 tokens, and the prices changes based on market demand. Axie Infinity Shard or AXS is the native governance token of Axie Infinity, whereas you can use Smooth Love Potion or SLP to pay for breeding fees. In the near future, AXS holders will be able to vote on decisions regarding the game and its future development, as well as stake AXS tokens to earn rewards within the game. Blockchain technology can disrupt a lot of industries in the future. The gaming is the prime example of how blockchain and cryptocurrencies can challenge existing notions and change the game on its head. Well, are you into cryptocurrency or are you planning to invest? Let's know your thoughts about this video in the comment section below.